Rivian Automotive Inc., trading on the NASDAQ under the ticker RIVN, is currently trading at 22.45 USD, marking a significant intraday climb of 10.70% as the market reacts to shifting sentiment in the electric vehicle sector. This double-digit surge isn't just a random fluctuation, it represents a fundamental shift in how investors are weighing the company's survival against its long-term technological dominance. While the broader market often views Rivian through the lens of a struggling startup burning through cash, the reality unfolding right now suggests a decoupling from the traditional EV pack. We are seeing a massive spike in volume that has pushed the stock to a new 52-week high, shattering previous resistance levels that many thought would take months to overcome. The immediate catalyst for this movement is a combination of institutional reevaluations and a massive technological pivot that the market is finally beginning to price in. Most investors have been focused on the headline-grabbing losses, but the hidden reality is that Rivian is effectively morphing from a simple truck manufacturer into a high-margin software and silicon powerhouse. For anyone using the Robinhood app or browsing investing sites for the next big move, the expectation has been that Rivian would slowly fade under the pressure of high interest rates and slowing consumer demand. Instead, the company just presented a technological roadmap that challenges the dominance of established players. They aren't just building cars, they are designing the brains that run them, a move traditionally reserved for giants like Nvidia stock or Tesla stock. Let's look at what is actually happening under the hood. The common ground among retail investors on platforms like SoFi or Robinhood is that Rivian is a risky bet because it lacks the scale of Ford or the profitability of Tesla. However, the contrarian view, the one driving today's 10% gain, is that Rivian has built a technological moat that even the largest legacy automakers can't replicate. While other companies are forced to buy expensive, off-the-shelf chips and software, Rivian recently unveiled its own custom silicon, the RAP1 chip. This isn't just about technical bragging rights, it is about the bottom line. By removing third-party hardware costs, they are positioning themselves to achieve gross profitability much faster than the market anticipated. If you're watching this on your Fidelity mobile app or managing an individual brokerage account, you need to realize that the market is rewarding Rivian for its vertical integration, not just its delivery numbers. Comment below how many shares of RIVN you currently hold or if you're waiting for a dip to enter. The narrative of EV winter has dominated the headlines for months, leading many to believe that every non-Tesla startup is headed for bankruptcy. This expectation has kept RIVN's price suppressed for much of the year, but the reality is that Rivian is proving to be the exception to the rule. We are seeing heavy institutional activity, with major funds using their interactive brokers platform to build positions as the company nears a critical turning point. The partnership with Volkswagen is no longer just a theoretical lifeline, it is a multi-billion-dollar validation of Rivian's software stack. This joint venture is already generating hundreds of millions in high-margin service revenue, which is a massive departure from the traditional model of just selling pieces of metal on wheels. When you look at the technicals, the stock has just cleared its 50-day and 200-day moving averages with conviction. Volume today is more than double the daily average, suggesting that this isn't just retail enthusiasm, but significant institutional buying. For those engaged in online investing through Schwab Intelligent Portfolios or similar automated systems, the shift in momentum indicators is likely triggering buy signals across the board. The RSI is trending toward overbought territory, but the strength of the breakout suggests that there is real substance behind the move. The market is finally starting to see Rivian as a tech company that happens to make trucks rather than a car company trying to figure out tech. Despite the recent rally, the path forward is not without its hurdles. The reality is that Rivian still needs to execute on its R2 platform, which is the key to capturing the mass market. Expectations for the R2 are sky high. It needs to be the Model 3 moment for Rivian. If they can launch it at the promised $45,000 price point while maintaining healthy margins, the current stock price will look like a bargain. But if they face production delays or cost overruns, the market will be unforgiving. This tension between the potential of the R2 and the execution risks is what creates the volatility we see today. Investors using Fidelity Wealth Management or other professional services are likely watching these production milestones more closely than the daily price swings. To understand where we are, we have to look at what Rivian actually does. They design and manufacture high-performance electric vehicles, specifically the R1T pickup and the R1S USV, but their real value lies in their software-defined vehicle architecture. Unlike legacy trucks that use a patchwork of different computers from various suppliers, Rivian's vehicles are built on a unified system that can be updated over the air. This architecture is what attracted Volkswagen to the table. For a company like VW, which has struggled with its own internal software development, Rivian's technology is worth billions. This is why you see such a strong reaction in RIVN today. It's a bet on the licensing and software-as-a-service model, which offers much higher margins than manufacturing. Looking back at past performance, Rivian's IPO was one of the largest in history, but the stock spent years in a downward trend as the reality of capital-intensive manufacturing set in. They had to deal with supply chain bottlenecks, rising material costs, and the general cooling of the EV market. However, 2025 has been a year of operational discipline. They've cut costs, streamlined production in their Illinois facility, and successfully launched their commercial van business beyond just Amazon. This history of struggle followed by disciplined execution is what builds the kind of investor confidence we are seeing today on interactive brokers and other trading platforms. The future outlook for Rivian is intrinsically tied to its ability to scale. The upcoming R2 and the even more compact R3 models are designed to move the brand from a luxury niche into the mainstream. We are looking at a potential catalyst in the next earnings report where the company might provide more clarity on its path to full-year gross profitability. If they can show that the Volkswagen capital is being used efficiently to pull forward the R2 launch, we could see another leg up in the stock. On the flip side, the risk remains that a broader economic slowdown could dampen demand for even mid-priced electric SUVs. For those who self-invest or use investing sites to track their portfolio, it's important to differentiate between the noise of daily fluctuations and the signal of long-term structural changes. The surge to 22.45 USD is the signal that the market's expectation of failure is being replaced by the reality of a viable tech-heavy competitor to the established order. Whether you are using Robinhood fractional shares to build a position or managing a large Fidelity brokerage account, the key is to watch the adoption of their new AI-driven features and the progress of the Volkswagen joint venture. These are the factors that will ultimately determine if Rivian can sustain its current momentum. As we move toward the end of the year, the macroeconomic pressure remains a wild card. Changes in government policy regarding EV incentives or shifts in the interest rate environment will continue to affect high-growth stocks like Rivian. However, the company's recent moves to fortify its balance sheet and develop its own intellectual property give it a cushion that many of its peers simply don't have. This is why the sentiment is shifting from "will they survive" to "how big can they get?" The market is starting to price in the possibility that Rivian isn't just another EV startup, but a core piece of the future automotive infrastructure. In summary, the story of Rivian right now is one of expectations meeting a much more robust reality. The expectation was a slow, cash-burning decline in a crowded market. The reality is a company that has secured massive strategic partnerships, developed its own proprietary silicon, and is successfully transitioning to a mass-market production model. Today's jump to 22.45 USD is the market's way of admitting it may have been too pessimistic. The authority with which Rivian is moving into the software and AI space is forcing a re-evaluation of its entire business model. If you're managing your own investments or looking for investment help, remember that the most successful investors are the ones who can see past the immediate hype and understand the underlying technology. Rivian is no longer a speculative play on the future of trucks, it is a concrete bet on the future of transportation intelligence. Whether that bet pays off depends on the execution over the next 18 months, but for now, the momentum is clearly on the side of the bulls. The contrast between the previous skepticism and today's aggressive buying shows just how much the narrative is changed. Keep a close eye on the volume and institutional flow on your preferred trading platform, whether that's SoFi Invest, Fidelity, or Interactive Brokers. The way the smart money is moving into Rivian right now suggests that they see a floor that didn't exist 6 months ago. As long as the company continues to hit its production targets and refine its tech stack, the gap between investor expectation and the reality of their growth will continue to drive price discovery. This isn't just a rally, it's a re-rating of what the company is actually worth in a world where software is the primary differentiator.